Welcome to the StockMentor.com studios here in the beautiful Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and I'm making professional trading simple. Welcome to my Sunday weekend video, new plays in this video, and we're going to talk a little bit about a potential scenario that we may see play out over the next couple days. It would be my quote-unquote perfect world scenario, I think, for all parties involved. We'll see how it all works out. First of all, I'd like to say Ronald had a lot of new people sign up for my weekly newsletter this past week. So thank you for doing that. There will be a new subscribers video out this afternoon. I've got a lot of really good plays in there, and I'm going to discuss a few of the some more intricacies within the market that we need to be watching this next week. All part of the value-added system. I don't talk about it in my daily videos, but I go a lot more in depth about what I'm really watching and different things that I'm watching within the markets from a subscriber standpoint. So you guys make sure you stick around, tune in for that one. That's to come. But one of them that's signed up, there are a lot of times where I send out an initial email and it goes right into a junk or a spam folder because your email doesn't know where it's coming from, so it errs on the side of caution. I've heard from everybody this week except for Ronald. So Ronald, if you are getting my emails, please let me know that you are getting those. I don't want you to miss anything. I want to make sure you're in on this weekend's video. You're going to want to hear what I'm going to be talking about in those videos and get my intraday comments during the course of this week, especially this week with month end coming. All right, into the markets. The perfect world scenario, cut to the chase, is this. We have seen a really good run down by the bears since the Fed spoke. If the bulls are going to hold this up, they need to make a stand. I mean, they need to make a stand now. Ultimately, this is what I think could happen. We've had a huge run up since March? And we are now coming into month end of September. October has never been all that good for equities. And we're right at the end of a quarter. So we'll have a lot of quarterly statements going out on funds from fund managers. For a lot of them, this is also year-end, so there will be year-end balances and year-end reports going out. And they're going to try to make that, I would think they would want to make that look as rosy as possible. Now, they've already run it up, and it's already up quite a bit over the last few months, so they're actually pretty rosy even as it stands right now. The common scenario is to buy all winter long, sell in May, go away. Some of you have heard that saying. You sell in May, it usually drops over the summertime. Then you try to run the stocks back up in September, make it look all pretty, and then you can send your reports out. Everything looks rosy for everyone coming into the last part of the year. So, but in a perfect world, they would. I think the bulls would really like to see this thing run up into month end. Get this as close to the highs as they possibly can for September. Make it look as nice as they can for all of their fund holders. That way, when they sell out their quarterly statements, everything looks great and rosy and fine. The bulls or the bears would not like to see them get it much above 1060, 1065. That would probably be the most they'd like to see this thing close at come Wednesday night. So it's going to be somewhat of a battle. I would think that the bulls should make somewhat of a stand right here. I guess we'll know tomorrow morning once the futures open and once we see where the markets are going to go overnight. There wasn't a lot of big news that really came out over the weekend. I don't know if it really would make a difference, but there wasn't anything major that happened, news-wise. So I would think that we might get a pretty flat open. That would be actually good for the bulls if something like that happened, if they could hold here and then kind of move it up into Wednesday. So there's your perfect scenario. See it run up Wednesday, run up into Wednesday's close. Then come October, the bears would love for it to be below about the 1060, 1065 area, and then they could maybe start to make a stand in October and run this thing down during the month of October and try to reclaim some area that they've given up the last 7 months. Looking at the Dow, you can see this is where the Fed spoke, and we dove straight down, but right back into a support area here. Pretty strong support going back to this area here. On the NASDAQ, we'll skip right away to that, and you can see this also has the same support area drawn in. All the markets have done is they've run back down. If you're an Elliottian, this kind of looks like it could be a finishing 5 wave here, down back into the 1690 area. Break below 1690 means that this particular quote-unquote wave is not done. For all of you that don't follow Elliott Wave, that's okay. Don't have to. It's not a big deal. But for those of you that do, obviously a break below 1690, and we're kind of we're obviously not done with whatever it is we're working on here. We'll have to wait for that to unfold. Just look for this break of this support line. This takes us back down to about the 1675 area probably on a break of this. Might see a pause at 1680, but 1675 is probably where the NASDAQ will go after that. On a daily, you can see this dotted line I have drawn up through here. This would also be a very logical place of support for the bulls if it falls any further than what it is. We've had a good push down the last few days, down about 55 points, 60 points in the last 3 days of the markets. Would not be surprised to see a little bit of a bounce here. And it's this next bounce that's really got my curiosity piqued. We'll have to wait and see where we go and if and when we turn around at any particular place up there. The 200 period moving average on a weekly was broken last week, but no confirmation this week. We pretty much finished on just above for the week. We're really looking for a harder push down, but it's got a lot of support below it now. Now you've got, this strong 1600 area, but you got the 200. You've got this previous support area here, and there's a line that runs through here. We'll see it on the Qs, and it runs down here about the 1650-ish area as well. And that should act as strong support for the Qs on the way down. SPX on a 60-minute had kind of a bull flag, broke out of it, moved back up here. Fed talks, things crash. Now we're right back down here to a support area, and that 1040 I think is really, really going to be a line in the sand. The bears definitely want to get below it. The bulls definitely do not want to give this area up. This is a strong area of support resistance. We can see that we had a channel drawn in here. We broke below it, and it's held as resistance. Here, 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 broke down. Here, here. It's holding as resistance. The bulls are going to have to get it up really basically past 1050 to stand a chance of even of a move towards the upside into the end of the month. So be watching for that early in the week. On a daily, you can see that the 20-day moving average is 1040. Another reason for 1040 to hold. There's really a big confluence of support here. You've got the 20-day moving average. You've got this thin previous resistance line, support line that's running through here. It's coming through, acting as support, should act as support. A break below it and a close, more importantly, a close below the 1040 is going to be a bearish move. SPX on a weekly, changed my lines a little bit, got to digging into the weekly. I really loved this line here coming down, held on a weekly basis, because this line goes back even a few years, a couple years. And so I changed this little upper trend line ever so slightly to give myself just a little bit better view of this. I really like it now, and you can see even so it held. A break below 1,000 is of course obviously going to look very bearish to the markets, because we've come from 1080 down to to break 1,000 would be a very bearish move. But more importantly, it's going to break this rising wedge that we see on the weekly. If we can get a weekly close below about 1,000 right now, of course that number keeps going up every week. That stays within this rising wedge. So let's watch this very closely. The VIX broke down, but back up to resistance again. A plus, it's above the 20 and the 50, and a move up in the VIX would mean more downside to the markets. As you can see here, the MACD has been diverging for quite a while. So I think when this thing breaks, it's going to break hard. And this could be a big push down in the markets if the VIX moves up. So we will watch this. If this can, this is a weekly chart, and see how it's held this previous support and this 200 period. But this thing gets a hard break above 20 and eventually above 30 here, the 20 period moving average, and then the 30 on the weekly. You can already see that the MACD has crossed over down here, and the histogram's been up above it for a while. If that holds and it manages to move up, we could see that October bear scenario I was talking to you guys about. Like I said, very beginning of the week is going to be very interesting to see what holds and what doesn't. Apple is my first equity play. I kind of like these lines right now. I'm not completely sold on them. They make more sense from a 5-minute time frame. Go to like a 2 or 5 day 5-minute, and these make a lot more sense as a falling wedge. This here on a 60, not quite as convincing, but really 182 is your line. We could kind of see a shoulder, a head, and a shoulder forming here. A break below 182 would be very bearish on Apple. Watch that close this next week. On a move back up, let me go back here quick. Look for the 184 area to hold, because it's going to be a confluence here now of the 20 and the 50. That could make for a very strong resistance area above Apple with its move down. These type of charts are also being seen in Goog, and we know what RIM did. It completely fell apart last week.